Hello students, in this marginal costing video, I will solve two problems. I will teach you how to study the question in the question paper, how to derive the data, understand what is to be solved, and then solve it in a step-by-step manner. So let's begin. This is also 14 mark question. Typically all your question number 3 is 14 mark. Mrs. Bishalgar Tiles Limited is manufacturing and selling 4 types of PVC paver block which are used for laying in public park. The board of director is considering a proposal for product promotion campaign which would cost the company 2.5 lakh. So this is the additional fixed cost. The business development department provides the following two alternative sales budget. So what is alternative 1 without this promotion campaign? Alternative 2 is with promotion campaign. What is the difference? There are different number of units. So with the promotion campaign, there will be more sales, more number of units. Selling price and variable production cost are budgeted as follows. So you have selling price, then you have direct material, variable, direct labor, variable, variable production at variable. All are variable. And additional details as follows. The variable production overhead is absorbed on machine hour basis at a rate of 1.2 per machine hour. So here you have variable production overhead. Here you have the absorption rate. So with this you can find out hours required per unit. Fixed overhead to be 35,000 per annum. Production capacity during budgeted period is 8,90,000 machine hours. So here the limiting factor is machine hour, and total maximum machine hour available 8.9 lakh is already given. You don't have to calculate indirectly. Product AON and Xeon can be bought from market at 10.5 per unit and 15.5 per unit respectively. The machine capacity will not increase after production promotion campaign. So capacity remains the same. It is not going to increase. This is not a additional factory overhead, additional fixed cost. But this is just a promotional campaign. So the fixed cost is of advertisement nature, promotion of nature. Determine whether the Bishalgar Tires should invest in product promotion campaign and advise how the production facility would be utilized. So in this, what you have to say, what is to be find out? 1. Product mix. So product mix, how will you find out? This is limiting factor based. So that means you have to find out the ranking. So ranking has to be found out, contribution per machine hour. Second is decision making or evaluation of choices, with or without promotional campaign. So how do you do this? Whichever gives higher profit. So this is a combination of two types of problem. That is why it is like 14 marks. So now first we will prepare statement of marginal cost using without product promotion campaign. That is the existing scenario. We'll apply this. So you will have 4 columns. You will have to prepare a template like this, where you will have 4 products. So up to profit is your normal. Then after profit, we will find out machine hour and also contribution per machine hour. Then ranking. So ranking will give us production mix, which one has more contribution per hour. So let us start with AON, Neon, Xeon and PP, 4 products. So all will have 2 per unit total. So this is AON, second is Neon, Xeon and PP, the last total. So make 4 sub columns like this. Now let us start with the sales of Neon. Sorry, AON. So 12, 14, 16, 22. 12, 14, 16 and 22. After that, let's go one by one. 5, 2 and 0.84 for AON. 0.52 and 0.84. So total variable cost is 7.84. 7.84 is the total. So what is the contribution per unit? 12 divided by 12 minus 7.84. 4.16 is per unit. Now let's go and find out how many machine hour this requires. So machine hour is absorbed at what? 1.2 per hour. So for 1 hour it is 1.2. How many hours for 0.84? So you have to multiply or divide to get the machine hour. 0.84 divided by 1.2 is 0.7 hours. Then contribution per machine hour, 4.16 divided by 4.17, 0.17, 5.942 per hour. So now we can also calculate total. So AON, how many units? 2 lakh, 3.5, 3.2, 1.9. So let's also write units. So 2 lakh, then 3.5 lakh, 3.2 lakh, 1.9 lakh. So we can now calculate from the contribution total column only. 4.16 into 2 lakh. 8,32,000 minus fixed. Fixed we will take at the total. We don't have to consider it here. Then similarly for neon, 14 is the sales price and 6.5, 2.5, 0.72. 6.5, 2.5, 0.72. Total is 9 plus 0.72, 9.72. So contribution is 14 minus 9.72, 4.28. 4.28 into 3.5 lakh, 14 lakh 87,500. Oh, 1 minute. 4.28 into 14 lakh 98,000. Then machine hours. So you have to take this 0.72 divided by 1.2. 0.72 divided by, so 0.6 hour per unit. So contribution per machine hour, 4.28 divided by 0.6. 7.14. Next, 16 Xeon. What is the variable cost? 8, 3.5, 1.2. 8, 3.5, 1.2. So total is 12.7. 16 minus 12.7 is 3.3. 3.3 into 2 or 3.2 lakh. 1056. So 3.3 divided by 1.2. Sorry, not 3.3. 1.2 divided by 1.2. So it will give you 1 hour. So contribution per machine hour is 3.3 per machine hour. Next, last one, PP. So PP 10, 4.5, 1.2. 10, 4.5, 16, 14.5, 1.2, 15.7, 22 minus 15.7, 6.3 is the total contribution per unit. Here also 1.2, so this is takes 1 hour. 6.3 divided by 1 is 6.3 only. 6.3 into 1.9 lakh. 7 lakh 97. Now we will compare contribution per hour, machine hour. So which is highest? So this is highest 7.14. So this is rank number 1. Next, second highest is PP. Third highest is this 5.92, and this is the last one. Okay. So after this, then production capacity during the budgeted period is 8.9 lakh. So we have to now assign, we will take the units which are given here and assign how many units can be purchased or manufactured based on the ranking. So we will prepare one small table for that. So product, we have 4 product. Okay. Hours per unit. Hours per unit we can take from the this table 0.7, 0.611. Next, ranking we anyway know. So ranking we should start with. Also on top of these products we will write the maximum units as per with promotion campaign table 2.4, 3.8, 3.5, 2. So 2.4, 3.8, then 3.5 and 2. 3.5 and 2. So which is the first rank? First rank is neon. So therefore I will first produce maximum units, which is 3,80,000. Now I'll write balance hours here. So how many hours are consumed? 380 into 0.6 hour per unit. So 228 is consumed. 2,28,000 is consumed here. Now balance how much I have? 890 minus 228. 662. Next, second rank is PP. So I will fulfill maximum 2 lakh here. So 2 lakh unit can be produced. I will also take 2 lakh hours. So I have 462. Next, third rank is A1. A1 2.4 is the maximum. So 2.4, 240 into 0.7. I need 168. So I need 168 hours and I can maximum utilize this. Next, so balance is 462 minus 168. I have 294. Next, last one is Xeon. I am left with 294 lakh hours. I can also produce these many units. So all these are manufactured. So purchase units. So the balance units of Xeon I have to purchase. 350 minus 294. 56,000 of Xeon I will purchase. Now I will prepare the statement with these numbers. So in this table 2.4 lakh is AON, 3.8 lakh, and Xeon we calculate 2.94 lakh is manufacture. Then PP is 2 lakh. So all other things are same only. So we will now add this. In the Xeon, for the balance unit, we will add the purchase cost. Because Xeon we are manufacturing only 2.94 and 56 we are purchasing. So this Xeon can be bought from outside market also. What is that price? Xeon can be bought at 15.5. So 56,000 into 15.5. So this is 86, 8,68,000. So this has to be added to the total cost. This we will add in this table. So 4.16 AON into 2.4 lakh. 9,98,400. Next one, neon, 4.28 contribution per unit into 3.8 lakh. 16,26,400. Xeon. So I have to also subtract 8,68,000 from this. So that is my cost actually. So I will take that separately. We will take that separately. So right now we will take 2.94 lakh into 3.3 contribution per unit. 9,72,070,200. Then last one is PP. 2 lakh into 6.3. 12,60,000. We will also take Xeon purchase, which is 56,000. Selling price is 16 and purchase cost is 15.5. That means 0.5 into 56,000 is the additional contribution. So plus 28,000, I will add it under Xeon. Now, what is my total contribution? Addition of all this. 48,83,000. 48,83,000. So total contribution is 4883. Thing is happening here. 4883. I'll write 000 here. And what is the fixed cost? So we did not add anything or subtract any fixed cost in the previous table. So regular fixed cost is 35,000 per annum. But since we are going with this additional production campaign, another 2.5 lakh has to be deducted. So total 2.85. So minus 2.85 fixed cost. So what is the profit we will get? 4883 minus 2.85 lakh. 45,98,000. So in this problem, both product mix was found out. Then evaluation of for evaluation, now we will come to this. Here total we had left it at a lesser cost. He is a small player. So whenever my capacity exceeds, what I can do, I can give some portion for him to manufacture. So he will manufacture and give, I will sell. He will not sell directly. He doesn't have access to market. He doesn't know my customer. So that is subcontracting. TTD Limited manufacturing a single product has a normal working capacity of 8,000 units per annum. Okay. So capacity is 8,000. That means anything above 8,000, I have two choices. One is I have to increase my capacity. So I have to incur capital expenditure, more fixed cost. Then I can increase from 8,000 to more than that. Or what I can do, I can subcontract. The sales manager has projected a sale of 10,000 units for year 21-22 at a price of 250 per unit. So this is my selling price per unit. The operating budget for 21 and 22 are as follows. Sales is given. So all the values are in lakhs, 20 lakhs. Cost of production is given. Raw material, variable cost, direct wages, variable cost. Works overhead, variable plus fixed. Administration overhead, all fixed cost. Selling and distribution overhead, variable plus fixed. Then there is a profit given, total profit. So in order to solve this, first we have to divide this variable and fixed cost. Purely variable we have to find out. So works overhead, 50% is fixed. So that means 0.7 is fixed. Then 0.7 is variable cost. So this is 0.7 lakh. 0.7 lakh divided by 8,000 units. 70,000 divided by 8,000. I will get 8.75 per unit. So works overhead is 8.75 per unit. Then administration overhead all fixed, nothing to do. Selling and distribution 80% fixed. So 0.8 is fixed cost, 0.2 lakh is variable cost. 0.2 lakh means 20,000. 20,000 divided by 8,000 units, 2.5 per unit. So this is 2.5, this is 8.75. So my all fixed cost will be 0.6 plus 0.7 plus 0.8. So 2.1 lakh is my total fixed cost. Now, next we will read. In order to increase production to meet sales demand, two proposals have been put forward. What are this? First is subcontracting the production of 2000 units. This is first. Second, installing additional machine which will entail the following expenses. Cost of machine 2 lakh, life 20 years. With this, what additional cost will come? Depreciation per year. So 2 lakh divided by 20 years mean you will get 20,000 per year, 10,000 per year. Additional fixed cost. B. Recruitment of 10 workers including direct workers to operate the machine at wage rate of 500 per month. Add 25% towards employee benefit. None of the existing worker will be utilized for this purpose. So this 25% will be applicable for only the additional 10 workers. C. Interest on capital required for the purchase of machine at 15% per annum. So 2 lakh on that 15% I have to charge. So that also gets included. So 2 lakh into 0.15, 30,000. So 30,000 additional fixed cost. The following additional fixed expenses will be required in respect of both alternative. Administration expenses 10,000 per year. Then selling and distribution expenses 20,000 per year. Okay, you are required to prepare a statement showing respective profitability of the two method of increasing the production. Comment upon the choice of one of the two proposal. So this is your question. It's an easy question. You just have to prepare two tables. One with subcontract option and one without the subcontract option. I mean one with the installing the additional machine. So first we will take the basic one, subcontracting option. Okay, now we can start writing the values here. Sales per unit is 250. In both the cases it is 250. And variable cost, raw material. So raw material we did not calculate here. So we will calculate now. So 12 lakh divided by 8,000. It will give me 150 per unit. Wages 3 lakh divided by 8,000 units. 37.5 per unit. 150, 37.5. Works overhead 8.75 and S&D overhead 2.5. So all put together 150 plus 37.5 plus 8.75 plus 2.5, 198.75. So my contribution is 250 minus 198.75, 51.25 into 8,000, 4 lakh 10,000 minus my fixed cost. 2,10,000. Now in the subcontracting, all my variable cost will not be there. What is the subcontracting? It is 225 per unit. So all my variable cost put together is 225. So contribution per unit is 25. 25 into 2000. So there won't be any fixed cost. What is my total contribution? 4,60,000 minus 1 minute. So in the question, we will also see the following additional expenses will be required in respect of both alternative. So that means these two fixed cost gets added in the second column. So this is not going to be 0. This is going to be 30,000. So my total fixed cost is 2,40,000. So my profit is 4.6 minus 2.4, 2,20,000. Now similarly, we will prepare a table for the second alternative. So this is the first alternative, subcontracting. Second alternative is increase capacity. So here also what I can do, I will split it into two columns. One is manufacture 8,000. Then here additional manufacture 2,000. The reason for doing it is there are certain wages premium which are given only in the case of additional 2,000. So it will become easy for me to split the values. So let us read the question again. So there will be additional fixed cost. This is one. Then there will be additional wages cost in the second case. Then there will be additional fixed cost of interest. So remaining thing is same. So that means I can just take the same values at the contribution level. So 4.1 lakh sales minus variable cost. So sales minus variable cost, I can take also contribution only. The same thing will be there for 8,000 units also. So I will take from contribution minus fixed cost. So in the examination, you will have to fill up all this. Then we will see profit. So here fixed cost, we will take slightly longer row because there are additional fixed cost for additional machines. So what was the contribution of 8,000 manufacturing? It was 4.1 lakh. 4.1 lakh. And fixed cost, regular fixed cost was 2.1 lakh. Now, for additional 2,000, my sales is going to be 250 only, not going to be changed. And what was my total variable cost? It was 198.75. So raw material stays 150. Wages for this 2,000, there will be more wages. What is the wages here? Recruitment of 10 workers, including direct worker, to operate the machine at a wage rate of 500 per month. So add 25% towards employee benefit. So there are 10 workers. So there are 10 workers, 500 per month into 12 month into 1.25, because 25% premium we are giving. So this is 7.5 lakh. Sorry, 75,000. So 75,000 divided by 2,000 units, 37.5. What were we paying? We were also paying 37.5 only here. Okay, so 37.5. No change here. 37.5. Then other two remains the same, 8.75, 2.5. 2.5. So total is 198.75 and contribution is 51.25. So 51.25 into 2,000. 1,02,500. Now what are the additional fixed cost I will incur? One is this 10,000 per year. Then there is interest of 30,000 per year, 40,000, then 10,000 plus 20,000 per year, 30,000. So 30 plus 40, 70,000 I will incur more. 70,000. So what is my total contribution? 410 plus 10. This is my total contribution, and my total fixed cost 2,80,000. So my total profit is 2,32,500. So this additional fixed cost is on account of, one is depreciation 10,000, second is interest 30,000, then additional overheads which is 30,000. Okay, this is the breakup of the 70,000. When you take this, the total fixed cost is 2.8 lakh, total contribution is 5.12 lakh, then you get a profit of 2,32,500. Let's now compare what is the profit. It was 2.2 lakh. So hence, it is beneficial to increase the capacity. So that is the one statement you have to write, since it is giving more profit.